Hello, Warriors. Dale Pinkert, TradeGATEHub.com, powered by TradeView Markets. Open up a demo and see you could trade every instrument in your imagination through TradeView Markets with competitive spreads, costs. You want to keep your costs down. TradeView does it for their clients. So I want to feature the yen today because it's really important. A lot of people are still really caught up that yields can't drop. And if you look at today's action, it's pretty negative. In fact, momentum has been dissipating. I was talking with the president of TradeView yesterday, and we were talking yen and gold and yields. And I was saying that I thought that this rally was weaker than the last one. This big pop here was on the CPI, which was the first lower peak, right? There's your 4-hour. Okay, so this is the yen, same type of situation. And this was on the CPI, as I said, your first lower peak. And then the nature of this rally has been pretty anemic. And yields have not made new highs. In fact, today, the yen came in on about 15.20 lower. And that's why, in the 10-year, was actually showing an up candle. So the case is building that even though the Fed is going to keep raising rates and talking like hawks, Powell was very hawkish yesterday, and yields really didn't do much to the upside, and the yen was still barely higher on the day after coming in stronger. So what does it mean? And let's talk about the correlation. So what it means is lower yields are coming. Therefore, lower yen. The correlation's been much tighter with the 10-year than it has been with gold. That's the other part of the correlation that's really been detaching. But a weaker yen and a major top in the US dollar yen. And let's take a look at a weekly. And, this was a massive move. So if we have peaked and this is double top, 127 is going to be important. And then, just a measured move could take you down to this high, was important, 24.5. And I know some bears are looking for 110. So I showed you the 10-year yield. It's a little different picture, and that's what they're talking about with the grand steepening is, check out what happened with TLT, which is 20-year paper. And it looks pretty heavy, right? So we had a nice little pop in TLT last week, and we'll see if we can put in a higher low here. So the yen would also pretend lower rates on the long end. So the long end seems more ready to give it up. And, you can't say that we, haven't done anything right, because we did have this nice reversal week, and this could just be a pullback. And with the yen doing what it's doing, and if we're headed to 27 in US dollar yen, you could get a rally in TLT back to 122-ish. But as you've noticed, that lower yields are not really helping the market. So I know a lot of people are thinking we're going to have a crash, and the S&Ps look like they were going to do it, actually close back above this line by a shade. And that's usually why you have to wait for, more than one close at resistance to have confirmation. So a lot of people are thinking, well, are we going to just, give up this 38.5 level? My narrative is that we're going to retrace this bounce from, I thought it was going to happen when Powell was talking like a hawk, but it happened with Target earnings. Come into our chat room, and Mike's providing great information on, what's happening to retailers, and, what a long time it's been, like Mike and I have been saying for a long time. We're seeing things, and we both have been around for a while. Mike's still a pup compared to me, but, Father Time is saying that I think we're just going to have a retrace of this move down here and not make new lows. So I would view this not because I'm declaring this the bottom for another assault on new highs, like a lot of the melt up guys are still saying that could happen. But I could see after a pullback and us finally closing over 41 for us to trade up to 42, 43 in front of the Fed. So, you know, my outlook is to look to buy a fib retracement, maybe 61.8 between here and there. Today is Wednesday, maybe sometime next week, could be Friday. But what you need to do is you just go to a shorter time frame and draw your fibs out. See if I could get it to go, and we could come up with a number. So, you know, here's your low. Call this a high. So basically, 61.8 back would be about 39.50. So I'd be watching these three levels of 50, 61, and 78.6. So closing back over this candle was pretty important. That's 39.5. So write this number down: 39.49, 61.8 back. And then if we have a fib extension of this rally, which was 200 and call it 30, 40, call it 250, that we could have a 400 if it's 1.618 of this after we pull back, and we have a C wave, which is usually a fib extension of an A wave, and it could be 1.618. We'll give you 400 from here, would take you up to 43.40. Okay, so maybe even enough to clean out the bears here before the next good shorting opportunity, probably in front of the Fed in June. So let's get back to the bailiwick. I want to go over the correlations because this is not just about analysis, this is about teaching. And you should know that when the yen is coming off or rising, what the implications are for other asset classes, so you could see which one is really leading the way. And I'd say that now the yen seems to be leading the way towards lower yields. And this could be a nice trade here. And you always have to have your stops in. And I would say if we traded back over this candle, say 29.02, or to let your trade breathe, you have to have your stop over 29.77. So that's about 100 pip risk from here, with the potential of about 190, 2-to-1 profit risk ratio. So sell rips in yen. I want to get to the euro now. So here's the big question for the euro and the dollar. Was that the low? You know what's interesting about this low right here at 138.40, 103.40, and I showed this on Monday's video. I think I have to go to a monthly. Yeah. I like my telescopes. How about you guys? Probably haven't clicked on a monthly chart in at least a month, probably longer. So this is really going to be a 20-year low if we take it out, because this was the low last 20 years. At 103.40, and you don't think that people look left to see where historical lows are? And what's the low here so far? 103.50. You don't think that there's some sell stops here? I think that there's a few. That's where every last euro hanger on looking for a bottom in the euro will throw in the towel, and you'll start getting parity talk. And what I will be doing is, should we take this low out by 100, I'll be looking at this as a potential 3 drive to a bottom formation. Okay, so I think this is possible. Here's a trend line. So here's your first drive right here, and look at the RSI reading underneath it, well under 30, right? And then here's your second drive here. Excuse my shaky hands. Right, here's your second drive, still a shade under 30. See that? Right there, 25. And if we get a quick sell-off and we get reversals off, you know, shade under 103, which would take out the 20-year lows, my bet is that the RSI will stay above 30 and I'm a buyer down there. Okay, so if that happens, that's the way I'm going to treat the euro. The other currencies, pound, has a pound bottom. Pound actually looks a little better, the RSI structure. I don't think you'll get a new loan pound. Looking at Aussie, you know, I thought there might be one more sell-off in Aussie, just a shade under the big round number of 68. We'll see, but if we start closing over 70 and a half, I think you have to declare that a bottom. Gold doesn't look as good as silver. Just a quick run on Dixie. Just like the yen, I think there's potential that the dollar did top here and that we may not get a third drive. When I think about what could cause a third drive, and we could still get it, or two can be enough, just like two drives and one divergence, even though it's not great, it's over 70, isn't going to be interest rate related, because what's happening with yields is actually kind of dollar negative. So the only thing I could think of that would cause one more, you know, like 180 pip decline in euro to make a new low, I think has to come from the geo front. I heard that Russia's sending out its subs. I don't know if there's a nuclear subs, but you know, there is a possibility of some escalation. You know, the market has really kind of not even paying attention as much to what's happening in Ukraine, just saying, you know, it's a stalemate, but it's fluid. It's not a stalemate. There's stuff going on, more important stuff than, God, dare I say it, the Fed. So if we had some type of event escalation in Ukraine, that could be the catalyst to drive the euro down one more time. So we'll see what happens going into, looks like it could be month's end if we're going to get that, or early June. But I still think there's a chance this could occur. All right, so Aussie, I'd like the opportunity to pick it up under, if that happens, under the 68 big round number. Silver, you know, from last week, you know, I'll take a victory lap, because for quite some time I've been saying, you know, silver was going to clean out all the bulls under 2140, right? And it did get a stop hunt, and then last Wednesday, I said I'm entering, you know, just entering, beginning. You know, I didn't expect to hit it on the button. It was a you know, pretty good rally from 2047. This looks like a key area to me, this 22 area, because when you look at the silver and you consider this could be the breakdown that we had, that shows up pretty good on a weekly. Okay, so you could call this a breakdown, and so far we've gotten back to the breakdown line. Looks like it's about 2180 or so, where, you know, you had a lot of support besides, you know, these little spikes. The longs are gone. There are a lot of people talking 19, 20, 18. You know, that could be typical of people, now that it's breaking, thinking they could get it real cheap. They could be right. You know, I would accumulate more down there, but there's also the chance, and that's why I have a position on, that this was enough to clean out all the remaining silver bulls from well over a year and a half ago. You know, this support level goes all the way back. So, you know, this should be a big breakdown. So some of the best trades are when breakdowns turn into false breakdowns. And getting closes over this week's high would seal it. You know, as far as are we going to make new lows? Sure, it's possible, but perhaps all we get here, like I'm looking for in the S&Ps, is a retrace. Gold not being as strong, you know, a little deeper pullback. Could we make a new low? The RSI says it's possible. I think it's going to be a pretty important level, but as I said, you know, I'm much more bullish silver than gold, and talked about the gold silver ratio peaking. And actually, this number is from my friend Peter Goodburn at 89 was its target. Nice work, Peter. And, we could have a little pop here, but I'd say that, the break that we've had from 89 is pretty significant, which if this is going to be a trend change and, we're going to need closes back under these highs, we'll probably get a bounce first. But back under 83, when the market's moving this way on the gold silver ratio, that means that silver is gaining relative strength against gold. Obviously, this has been, gold way outperforming, and I'm looking for a shift in that. So silver looks better to me structurally. I'm still, and I don't know in the oil, the bear in me wants to short it. I talked to some analysts, there are a lot of people saying that we could retest. I mean, we're so far away from the breakdown now, but, under 94. Anyway, I'm tempted to trade it from the short side, but I don't have to trade it if I don't know. And you know what? Even if you waited for some more negative action, you wouldn't even be late if you waited for a breakdown. That's what classical chartists would do. They'd wait for the signal. This is what human emotion does. Say, well, if I'm anticipating a 94 breakdown, why not get short up here and take the ride to the breakdown? Because before it does that, maybe we're going to go to 124 or retest the highs. So it's a no touch for me. Something I did notice yesterday is that the Russell, look at the structure of this give back in Russell compared to NASDAQ, looks much more vulnerable, looks the most vulnerable, and S&Ps look the second best. But this is something I brought up with Mike. I go, I started to notice that Russell was outperforming on the bounce. It was outperforming, especially yesterday, outperforming NASDAQ, S&Ps, Dow, everything. So I'm not sure what this means. I do know that David, who I've interviewed here, in his melt-up scenario, and as you can tell, how much the interviews that I do for you help me too, because, it gives me a feeling of and an understanding of both the bull and bear cases in a lot of different instruments. So it keeps my mind open. Don't just listen to people that agree with you. Listen to the other side of the argument, because maybe a light bulb might go off. That's my advice. A lot of people will only listen to people that agree with them. And if they're wrong, they're reinforcing that narrative. That could be a catastrophe. So keep an open mind and listen to different views. I think that's very important, and not just become a lemming for one narrative all the time, every season, every year, every quarter. So I think there's something changing here. What it means for the market longer term, or is this just a little pause in its underperformance? I don't know. I have a feeling with the market people being as bearish as they are, that, they could probably build positions in some of these stocks and go unnoticed, because, when the Russell's been in this type of bear move for such a long time, most people are going to, not even consider the Russell here. But we could have a decent rally from this attempt at a reversal. Even had a better reversal candle, even though red, than the S&P and NASDAQ last week. Taking a look at the semiconductor stock that I talked about here, it made new highs. Is this just an ABC and it's going to crash? It still looks good to me. The give back in the semiconductors is really not as serious as the rest of the market. They too are demonstrating good relative strength. You could really tighten up your stop if you bought them. get out of the way under 230. Okay, and we were talking about them back here, and then we had one more low. But that's what I liked about UMC. While the semiconductor index was making a new low, UMC was putting in a higher low. Okay, so I think that's a lot for you guys to chew on. Theme of this broadcast is a weaker yen heading towards 127, means lower yields, and we'll see what happens. It should mean lower yields should also be constructive metals, because there's less competition with rates to holding something that yields zero, which is what gold and silver do. Silver being the preferred long because of the turn in the XAU. XAU could recover, but I think the top is in. We'll see if the euro has bottomed. Really still not acting bad. I'll tell you what, guys, I do own a lot of euro in cash from, here and here and here and here. Sometimes it only takes two, but as far as my leverage trade on this, I'm going to wait and see into the end of next week and see if we get one more decline in euro to take out this 20-year low. To me, that would be a great sentiment setup. And if they take the metals down, I'll buy retracements of the rally in silver, probably around 21 or so. And remember, keep an eye on your fibs and S&Ps. Okay, we're not even halfway back of the rally we had from 38.50. So let's see what it does and where we get our reactions. Best guess 39.5, and then another advance. I hope that what we're doing here at TradeGATEHub.com is helping you guys out. Hope you're getting the hows, not just the trades, so that you could repeat it. Invite people to join us. Mike will be on in an hour and 10 minutes. Tune in to see what Mike is doing on this down day. He caught the bounce very nicely from last week, and AMD was a big winner for him yesterday. So I'll be here. So if you have any questions for Mike, I'll see you in the room in an hour and 10 minutes. Remember, don't just count your pips, count your blessings. And in my yen making new lows as we speak, and maybe I gained a little credibility with Tim on this yen call. A broken clock. Adios, everyone. Good hunting.